Hi, I'm Simon Duke, Managing Editor at Expana. Here's the Wednesday Weekly Roundup. As of this morning, the US and Iran have launched new strikes, and Kuwait said its international airport was hit by Iranian drones. Last week, sentiment and talks seemed to be geared more towards some sort of understanding, and markets were a bit more optimistic about the belief that some progress towards a ceasefire deal was coming. Now, things are looking more precarious this week as oil prices have risen for a third day running. Meanwhile, shipping executives met at a conference in Athens on Monday. Many at the event said that any peace deal worked out between the US and Iran would need to offer clear rules allowing vessels to resume normal business. Yesterday, speaking at the Deutsche Bank Global Consumer Conference in Paris, Nestle CEO Philipp Navratil stressed that his company remains resilient in the Middle East despite the regional volatility. The area represents just 3% of the company's global sales. But Navratil warned that consumer behavior shifts present a pressing concern. Rising fuel costs in emerging markets are prompting behavioral changes. For Nestle in the Philippines, for example, consumers are remaining at home more frequently and shopping closer to their neighborhoods rather than traveling further away. This shift plays directly into Nestle's distribution strength, he said. To offset these headwinds, Nestle plans to deploy price increases where market conditions permit and drive operational efficiencies to offset rising input costs. Looking at some regional case studies for commodity categories, we see the Middle East conflict-related disruptions increasing pressure on Sri Lanka's tea sector, with exporters facing higher freight costs, shipping delays, and weaker demand from several Gulf markets. The Middle East accounts for nearly half of Sri Lanka's annual tea exports. However, the Sri Lanka Tea Board recently reported firmer buying interest from Middle Eastern importers as they seek to increase precautionary food stockpiling. India's rice exports for the first 4 months of 2026 fell marginally by 1.3% from a year earlier, as the US-Israeli war with Iran disrupted shipments to Gulf markets. Exporters say that the shipments are expected to remain below typical levels until the Iran war ends. Rice cargoes bound for Iran, Iraq, Qatar, and Saudi Arabia remain delayed in transit because of the conflict, leading buyers and exporters to hold back on new deals. That's it for today. Visit expanamarkets.com to read all our coverage of the Middle East conflict. And as always, I appreciate you tuning in, and I'll see you next time.